Welcome to episode 27 of METACO Talks, or a series of live conversations with the people at the forefront of innovation in decentralized finance. Today, the title of the episode is Beyond Bonds, Opening Up a New World of Asset Classes on the Blockchain. And to discuss this, we have a special guest, Rehan AHMED, Chief Product Officer and founding team member at MarketNote, an SGX and Temasek joint venture on digital assets. Within this role, he focuses on product development, digitalization of capital markets products, including bonds, fund infrastructure, and sustainable finance. And as head of fixed income products and digital assets at SGX, Rehan oversaw the launch of a digital bond issuance platform that culminated in the MarketNote partnership. Now, Rehan was involved in the launch of the new platforms, including SGX's institutional bond trading platform in 2016, and led its general counterparty service 2018 rollout before focusing on digital assets. He's been one of the key SGX representatives on industry bodies such as ICMA, the Fixed Trading Community, and the Singapore National Market.
Hi, James. Good afternoon from Singapore.
Good morning from Switzerland. Listen, great to have you here. I would love to chat a bit about how you got into the digital asset space, how that evolution evolved.
Sure. So much like many of us in this space, it all started off with a personal interest in crypto that began sometime around 2016, early 2017. But I actually got a lot more interested in the efficiency as a result of smart contracts and ledgers. And there's actually a personal reason why. One of the first jobs I had in banking, which is many years ago now, I was actually sent to Japan to service an individual security that took about 2 weeks to service, right? So this security had more than 9,000 mortgages underlying, and I was the guy sent to go out there and service it. And back then, obviously, there was no concept of smart contracts and ledgers to be able to automate asset servicing. We always had that mindset of how do you make such an immense amount of data? How do you actually automate and make it more efficient for these kind of assets? So obviously, you're quite pragmatic about being able to support things like crypto in a major global exchange. I actually started focusing a lot more on what is the underlying technology, how to use smart contracts for really servicing of things like bond coupon payments that I was stuck in Japan doing for about 2 weeks. How do you automate maturity payments? How do you think about automating things like voting in the future? So as we started looking at that, the potential of the technology and the application was obvious. We really wanted to think about where do you use it? Now, as Singapore Exchange, we're quite a unique financial market infrastructure in the sense that we have a listing venue for bonds. We have a lot of Asian and US and LATAM issuers that come and list on us. But we actually also operate a depository in the region that supports, aside from equities, bonds. So for us, bonds, asset servicing is a bread and butter business. And it really began from looking at how can I use this particular technology, which is smart contracts and blockchains, to make life easier for our bond holding clients. That really was the genesis of it. And we've all been down the rabbit hole. As you start looking at the usage of the technology, different applications become a lot more apparent. The usage across different asset classes that may not be accessible to you become a lot more apparent. And here we are.
Fascinating. I imagine there was a dramatic shock when you had to do the asset service in Japan, and probably the advanced features were probably programming the fax machine more than anything, given how that was a critical piece of equipment. In Japan probably still is, but that evolution is pretty clear. Can you talk about how that is? What is MarketNote then? What eventually was the culmination of that experience, and what problem does it solve?
Absolutely. So what MarketNote started off in 2019 was really an attempt to create, let's call it a digital, i.e. humanless depository, which is at the point in which a bond comes to be custodized with us in our depository. How do you automate the settlement? How do you automate the coupons? How do you automate the maturity payments? And when we started working on this, it was pretty clear to start we needed partners. And usually within the bond market, you definitely need a large arranger. You need custodian banks. You need to be able to have trustees, the investors, and everyone just plugged into the ecosystem to make it work. So very early on, we searched for partners. Some examples I can give here are partners like HSBC, Subsequently, we also worked with UOB, which is a Singapore bank, on this. And we managed to understand how the post-trade could be fully automated. But as we worked with all of these parties, what became quite clear is that a lot of the data gaps and a lot of the workflow gaps actually lie upstream in the bond issuance process, right? So some stats I can share with you, depending on which bank you speak to and the complexity of the deal. A typical bond deal can have anywhere from 250 to 600 individual steps that are happening between the banks, the law firms, the trustees, the investor custodians, the bank custodians. And it became very obvious that if we were looking at fixed income as our first asset class, we had to look at the entire value chain versus just looking at post-trade, which is what we started off as. So it's a long way of saying that MarketNote essentially focuses on end-to-end DLT-enabled infrastructure. Fixed income is definitely our anchor asset class. Over time, we will look to make this a multi-asset infrastructure. And we have what we call an A, B, C, D, and E within our end-to-end. So typically in fintech, I'm sure a lot of your listeners will be aware of the A, B, C, D of fintech, which is AI, blockchain, cloud, and data. Our ABCDE is really A for access mechanisms. We're working on some really interesting products to be able to give issuers the ability to tap traditional capital markets through a digital access mechanism. Our B is our experience working with ledger technologies, blockchain technologies, which we've done over the last 2.5 years. Our C is cloud. We realize that the way this market is evolving, you need a faster deployment procedure. So everything you do is on the cloud. Data analytics we'll cover in detail throughout this webinar for sure. And last but not least is really ESG. And the ESG element is really interesting. We actually realize that as you're building out a future digital market infrastructure for traditional capital market products, it's something we could not ignore. It's almost turned into, in this day and age, in Europe and Asia and the US, into a borderline fiduciary responsibility, right? Being able to show, for example, for green bonds, where is money going? What are the kind of frameworks you're using? What are the kind of projects you can actually invest in? What is the ongoing impact reporting? So again, it's a very round-up approach to ESG. Lately, we come across many fintechs that are overnight ESG experts. We actually put that into part of our design process very early on.
Fascinating. I mean, you seem, when I look at other kind of similar market infrastructure, market utilities, they had a very different approach. Let's think about, the players like ASX or Deutsche Börse or SIX. They're really focused on the ledger side of the infrastructure equation. Do you think this has really been helped you, not kind of deciding what that core ledger is and really focusing on the issuance process instead? Does that make the task easier?
So here I'll direct it back to Project Ubin, which is how all of the parties met, actually. And as a matter of fact, we got to test out the interoperability between ledgers for trading and trading, clearing, and settlement as part of Project Ubin. So for us, that was a relatively well-known process. We, as a matter of fact, SGX, our parent company, actually filed a patent on this and has received it. So the mechanics were actually quite familiar to us. And for MarketNode, really, we had to try to prove out that there is a commercializable business for this. And when you start thinking in those terms, you start moving away from the concept of a minimum viable product to that of a minimum viable ecosystem, right? Which is your banks, your issuers, your law firms. And for us, we very early on within our digital bond project, we actually did a lot of design study into what the individual pain points were, right? For someone, to be completely upfront with the audience, right? For someone sitting on a DCM desk, right in the coal face, right? They really care less about consensus mechanics, right? They care more about, am I able to find, the last 10 COVID risk factors for deals done in Asia, right? They're looking for that sort of, they're looking for ESG data. They're trying to understand what the ESG profile of an issuer is. They're trying to gauge customer demand. And frankly, they're quite far removed. And also as someone that, controls the wallet and the spend on this, right? I think you have to look at what the business centers actually care about. So yeah, certainly a very different approach from what some of the other financial market infrastructure players have done. We also wanted to focus on fixed income because it's an OTC asset class. Typical, bond deals, public bond deals in Asia have 120 to 150 institutional investors. Private placement like deals have 1 to 3 investors. So you've got a smaller universe, right? You're not dealing with, major equity IPO that can also have retail participation. So some very natural, reasons why we chose to focus on the workflow, why we chose because we did a lot of design thinking workshops with our participants, and the feedback was loud and clear, right? So that's some of the thinking around which we built MarketNote.
Interesting. So it's clear what problem you're solving in the near term. What's the longer term mission of MarketNote? Where do you go? Where does this point? What's the end state of this?
Yeah. So let's start with what the current mission and vision is. So in the short term, we want to get fixed income right. And in the longer term, you want to take this concept of getting an end-to-end for one single asset right, and then be able to expand it. But let me break down end-to-end and what that means in this context. So when you look at an asset class like fixed income, let's split it into two, which is pre-issuance. So what is a point in time in which an issuer decides to come to the market to raise funding through a new bond? That involves a lot of documentation, that involves a lot of issuer profiling, investor sounding, and basically a lot of work on the front office. And then essentially you have the post-trade, through which you're able to settle it more efficiently, through which you're able to do corporate actions more efficiently. So for us, since we started MarketNote in the beginning of January, we had an 18-month horizon in which we had to get the fixed income end-to-end right? So we had to get certain parts of pre-issuance right and parts of post-trade right. So hopefully that is something we're able to deliver at the market by middle of next year. As a matter of fact, our first product launch is not too far away. We will be launching our pre-issuance platform on the 15th of December. And then subsequently, we have phased releases on post-trade. That should put us in a very good position by middle of next year to have delivered on fixed income. Now, whenever you're building out financial market infrastructure, I'm sure your listeners can appreciate, you have to think about making it multi-asset because of the common componentry, right? So that's where, starting to look at new asset classes that fit this paradigm, that, have issues that may or may not be similar to fixed income, but are definitely faced by participants, becomes quite important, which is why we've been looking at some of the newer asset classes that I'm sure we'll cover soon.
And what are those common characteristics? I mean, when you look at other asset classes?
Sure. So maybe let's zoom out from asset classes and think about, when you generally look at ledger technology, right? Yeah. What are some of the challenges it's supposed to solve, right? Generally, immutable record keeping, yes. Are you looking for a better way to connect data across participants? Absolutely. Are you looking at streamlining things like issuance, money transfers, get away from very traditional batch settlement processes that happen 1 or 2 times a day? And last but not least, are you able to create new investable asset classes from something that doesn't exist today? So when I look at the broad universe of instruments available, the ones that seem to fit in quite well are things like loans, which would be an extension of fixed income. So if you think about the global loan market, it's split into syndicated loans, and then you have the private loan market, right? And I'll share an anecdote with you from someone I met earlier in the week. He was telling me about how a secondary loan transfer he once did took him 45 days to settle, right? So in the bond world, we talk about, T+5 is a long time. Imagine the person who's out there trying to do a loan in secondary, right? So, when you think about all of these challenges, what it really comes down to is that you don't have a centralized infrastructure. And that's where I think this kind of technology is very useful for. So for loans, for example, there is no centralized infrastructure for things like bilateral private loans, right? And as a result of that, you actually don't have the ability to create a secondary market out of that, right? That's why because all the processes are very paper oriented. This is why it took that banker 45 days to receive his money. Yeah. Then I think when you start looking at things like funds as well, I think for funds really depends on the market you're looking at. Many regional markets globally really have very efficient fund infrastructure, but some don't. And something we definitely see a lot happening in Singapore with is so-called private funds, right? So, large public mutual funds, for example, they have some kind of infrastructure with transfer agents, custodian banks. But when you start looking at private funds, it's a very, lumpy landscape in that way, right? So again, if you have a core infrastructure that's able to tokenize, it's able to settle, it's able to actually create, have data at the depository level, then these sort of asset classes start looking very interesting, because then you're not going against an incumbent infrastructure such as the CSDs. Right?
That's fascinating. I mean, you identified a lot of, let's say, problem statements around the different asset classes. How do you look at trade finance? There's a lot of consortiums looking to resolve all the paper and manual processes and time delays involved in trade finance. Is there a role for a MarketNote there as well?
I would say it's something we've been studying intellectually versus from a product standpoint.
Right.
And the interesting thing about trade finance is, you're right, there's a lot of platforms and consortiums that are focused on things like bills of lading, right? And there's many good examples in Singapore and globally on there. That part, is better served by the fintechs. What interests us is, how do you look at the technology used in trade finance? So let's take, container logistics as an example, right? Some of the use cases that we're seeing now is really the adoption of sensory technology and, for example, verifiable credentials to be tagged onto container logistics that are then you're able to track their movement. Because you're able to track their movement, you're able to, let's say if you're a bank who's providing trade finance to cover you for, the receipt of a container, put it very simply, now you actually have a real-time view of essentially what your funding risk looks like, right? What your credit risk actually looks like. So I think the interesting part for us for trade finance is how this technology is used at scale at a cost-efficient manner, because we see a lot of overlap between that and how the technology could be used for ESG capture in the future, right? So I think that's a few years away, but we started looking at how that could be used, because from an ESG data standpoint, I'm sure we'll cover this in a little bit, we have a lot of data because SGX is a premier listing venue for ESG bonds in Asia. And you want to start thinking about, how that gets recorded. How do investors get a better view of all of the work that the issuers are putting into this? So we've really been quite interested in the technology. The second area that, frankly, MarketNote is not looking at, but we see a lot of this happening in the trade finance space, which is, how do you turn short-term funding and receivables into actual tradable products?
Absolutely.
And in that case, for example, it could be an anchor corporate that's really well known, right? And a bank is actually providing funding to the anchor corporate that is tied to, for example, payment to a supplier, right? In short, that is just seen by it could be seen by an investor as short-term risk to an anchor corporate. How do you turn that into a digital asset that can then be traded across a digital asset venue or a network of digital asset venues? That's some of the ideas that we're seeing in the trade finance space right now.
It seems the issue is not so different than aligning settlement cycles with trade cycles, basically, right? Obviously, you have a couple of days in equities, but trade finance could take 6 months to negotiate a contract with a bank. So aligning those would radically change how they get financed and probably increase the velocity a lot. You touched on the ESG data element. I mean, how can those properties be? I mean, are those properties codified or made more programmable? How do you plan to approach that?
Sure. So I think the first problem is actually to define the data set before thinking about how to codify them, right? And that is a big task, right? So if we look at the Asia offshore bond market, we have a number of issuers across different industries, mostly in financials, but then they go across to automotive and technology and real estate. And what we've been trying to do so far is to actually, I don't want to use the word standardize, but actually set a common data set across all of these kinds of issuers. And thanks to some industry bodies in the market like ICMA, the International Capital Markets Association, they've put in a lot of work into educating, putting out templates for reporting, putting out templates for frameworks. So, I got asked the same question earlier this week. My answer is that when it comes to ESG standards, it's a bit like how they talk about the future, right? That it's here, it's just unevenly distributed. Right? We find the same with ESG standards. There's no lack of existing standards and industry bodies that are working on this. The challenge is really the issuer awareness and education on how to use it. Now, once the issuer starts using it, we need to actually be able to start to define that common data set before thinking about codifying it, right?
Yeah.
So here, maybe I'll give you an example, right? You could have an issuer that decides to come to the market and they say, my coupon is 4%. Not that 4% coupons exist anymore, but the issuer could say, my coupon is 4%. And I promise you, the investor, that if my greenhouse gas emissions do not go down by 20% over the next 3 years, my coupon is going to go up to 5%, right?
Interesting.
Let's think about how that is actually done today, right? By the time you actually report that in 5 years, there's a lag in the reporting, right? Someone actually has to manually go in and report it. Then someone has to go in and manually actually amend the the coupon from 4% to 4.5% or 5%. One use case we can see in the future is for programmable assets. Through sensory technology, are you able to, this is a longer term play, are you able to record greenhouse gas emissions on a real-time basis? Once you're able to do that, are you then able to go in and amend things like coupons? You could also think about other penalties for issuers like this, right? And this is quite common in the marketplace. The remedial action could be, please ensure you go out into the marketplace and buy carbon credits, right? So it's this kind of policing that, unless you have the data set there, you can't even think about codifying it. So for us, making sure we have the right data set is what we've taken a long time to come through. We think that's going to be a continuing journey over the next year or so. And then we think in about a year's time, we'll start thinking about how to codify this, which is a very different approach from what I've seen, some of the green fintechs take, which is they go in and they say, you're a real estate issuer, let me give you a full end-to-end, full tracking mechanism, it's all there. And then the issuer says, what if I want, I'll give you one recent example that came across, right? There was a conglomerate that we were speaking to, and the conglomerate had textile manufacturing and aquaculture, go figure. So someone came to them with a great pitch for textile manufacturing and how to track supply chain finance there. But then turns out they said, actually, we've been thinking of doing a green bond for our aquaculture business. Do you have anything for that? So again, I think some caution required there. There's a lot going on in the ESG space, obviously, but for us to, put our heads down and get the data set right first before thinking of codification, we feel is the right approach. Also, you want to start with the right sector, right? Because not all sectors will be appropriate for this. So that's what we're spending our time doing on ESG.
Great points. What do you have to get right before you codify it? When you are getting to the point, we're talking about obviously to a large degree reinventing the kind of the technical stack. What's the difference you see in terms of the old issuance technology stack versus how you see that new issuance stack in the future?
Sure. So I'm sure your audience is very well aware of the new trading tokenization and ledger stack. I'll actually switch gears a bit and talk a bit more about pre-issuance, right? Which is how does an issuer decide to come to the market? And the incumbent technology in that market is Word doc and Excel, right?
Okay.
So you don't want to discount the incumbency over there. They are very powerful incumbents, and for many good reasons, because deals are very nuanced, right? You get very nuanced colors on complex credit deals that you can't codify. So I think we're actually quite excited about a lot of the new technologies that are being used in the pre-issuance space, and I'll give you a couple of examples. One could be data extraction technologies. How do you use optical character recognition or OCR to be able to extract certain clauses? So for example, if you're a Korean issuer coming to the market and you want to see what the last 5 Korean issuers have done in terms of the risk factors they disclose, right? Today, it's unfortunately some poor analyst sitting on a DCM desk, going around different sites, trying to get the documents in and running a Control-F search. We actually find extraction technologies that I think have matured a fair bit given the LIBOR transition, which is where banks had many different LIBOR loans that actually have to be migrated. We're looking at some use cases for that to be used for bonds. There's, for example, in the repo market, a bit removed from this conversation. In the repo market, you tend to see clause libraries being built out by industry bodies such as ICMA. And again, for us, a natural progression is that, bonds will need to have clause libraries. So we're looking at some of that. Then when you look at, going further downstream from there, there will be some element of document templatization, better sharing and collaboration tools on a single platform, right? So one example I'll give you is, CircleUps, right? So essentially today, auditors go and mark big red circles on financial statements. Could that be something that could be digitalized, right? And could you point that to a source? So again, a little bit removed from traditionally what I'm sure your guests talk about on your webinar, but we're actually quite excited about the usage of that technology. Going further downstream, when we were, back in 2019, we were looking at enterprise ledger wars, right? There were a number of players that were in that space, each having a different niche. We think that's consolidated a fair bit, right? It's a lot easier to, if not pick a single winner, then at least pick two winners in that space. So that gives us a lot of comfort. So I think, we, in a way, it's good to have a slight late mover advantage, when you're looking at downstream, because you can have your pick of the proven technologies.
No doubt. It sounds like, fantastic ambitions. And it sounds like a lot of the key to success are standardization. And obviously standards are about reaching consensus or build an ecosystem around those standards. How is that ecosystem progressing on your side? Sure.
So we think about ecosystem in two ways. The old method of building a platform is, launch platform, do 30-page onboarding docs, and, get your salespeople out there dialing, just going out there and reaching out to clients, right? We think that the new model is a little bit different, and a very good illustration is the partnerships that we forged with 10 financial institutions as MarketNode in late September. We are very open to the fact that, look, banks have a lot deeper relationships with the corporate issuers than, for example, today MarketNode does. We want to be able to work with these banks to understand their pain points on upstream and downstream, all of the points I was mentioning earlier about legal documentation. And we actually think working with these banks as partners and going to issuers is a lot more powerful than us being standalone. So that's one element of it, us looking at banks as key partners, really sponsored access into, key demographics like the issuers. The second that we see coming up from a distribution standpoint is really digital exchanges, right? And there's a number of them in this region that are, generally look at either private assets or bonds, but, if you think about Singapore as a jurisdiction, very technologically savvy jurisdiction, just investment savvy as well. And, many of them may not want to be served by a private banking advisor, right? So they're actually much more comfortable with the digital technology. And they actually understand the credits a lot as well, because many of them work in the financial landscape. So those are two models that are coming up. And, we do expect to be partnering with a few of these digital exchanges as we launch our post-trade products out before the middle of next year.
As part of that launch, what are the critical next steps for MarketNote?
It's the A word. It's purely adoption. Actually, I think the one milestone that I'm very proud of is our ability to build a rockstar team. Certainly, when we launched MarketNote, we were quite well known in the region. It's helped bring in some key players, some key participants, a lot of interest in joining MarketNote. So that's worked out quite well. I think our critical milestone will be to deliver all of our partners what we promised them we would, right? So we've always told our banking partners that by Q2 of next year, we would have the end-to-end. So whether they're looking at pre-issuance, they're looking at post-trade, they're looking at loans infrastructure, we would be able to serve them. So that's a critical milestone for me to achieve, which is making good on the promises that we've made to all of our partners. Right?
Clearly MarketNode is highly strategic for Singapore. Does that make it easier or harder to execute?
It would make it no harder to execute, but actually, I think we need to zoom out a little bit. So obviously, we have a lot of support here within Singapore, but looking at us coming out of 18 months of lockdown now, I think what will be critical for us is our ability to show that we can partner with international partners in this space And so, for example, we're speaking to some potential parties in the EU and outside of EU and the US. I think for us to deliver on that will be a lot more important going forward. Certainly, Singapore has been extremely supportive to us over the last year or so within our journey. The banks, the financial institutions, the buy side, the regulators as well. But I think we need to start thinking about how we partner internationally to be part of this digital market infrastructure that is pretty much at our doorstep.
Very exciting, Rehan. I mean, we're basically out of time. Any final comments, or how can people connect with you?
Sure. So I will. People can. It's Rehan at MarketNote.com. Please feel free to ping me on the. I think soon as you tag me on the METACO posts, feel free to reach out to me. Always happy to speak to external partners, people who are interested in partnering with MarketNode, people who are interested in working with MarketNode and working for MarketNode. So I'm on LinkedIn. Please feel free to reach out, and Seamus will add something to your show notes as well.
Rehan, it's been a real pleasure. Thanks for the time, and good luck with the next steps.
Yes, and we'll see you in Singapore next week. Thank you.
Look forward to it. Yeah, our next METACO Talks will be in 2 weeks' time. Until then, wishing you all a great weekend, and stay informed at metaco.com/talks. Thanks again, everybody. See you next time.